The truth about Iwoca business loans. Why quick cash could cost you your home. We need cash flow quickly. The bank won't lend to us. Iwoca says they can help within 24 hours. Sound familiar? If your small business is facing tough times and you're thinking about Iwoca for a quick injection of cash, hold on. Before signing anything, it's vital to understand what you're truly agreeing to, because it could put your home at risk. Let the real debt guy explain what we've uncovered about Iwoca's lending practices. What is Iwoca? Iwoca markets itself as a tech-savvy alternative to traditional business banking. They promise quick decisions, flexible lending, and support for small businesses that banks won't touch. Here's what they don't put in big letters. Nearly every Iwoca loan requires a personal guarantee, meaning you're personally liable if your business can't pay. That's your house, your savings, and your personal assets at risk. The personal guarantee trap. When traditional banks turn you down, Iwoca appears to be a lifeline. But here's the reality check. You're not just taking out a business loan. You're agreeing to be personally liable for every penny if things go wrong. From what we've seen, when things do go wrong, Iwoca doesn't mess about. Think about it this way. Would you take a personal loan with 2% to 6% interest per month, which, when annualized, can lead to an APR of roughly 24% to over 70%, depending on the terms and the borrower's risk profile? This interest rate could threaten your business's solvency. That's essentially what you're accepting with a personal guarantee. The main difference is that Iwoca refers to it as a business loan. What customers are really saying. Iwoca has excellent reviews on paper, but look closer and you'll uncover some quite shocking stories. One customer described them as operating like a loan shark behind slick branding. Harsh maybe, but when you're receiving threatening calls about losing your house because your business hit a rough patch, you can understand the frustration. Another customer mentioned that Iwoca wouldn't respond to 50% of their emails when they were trying to resolve payment issues. Imagine the stress that person was experiencing. Your business is struggling, you're trying to communicate, and they're just not replying. Then there's the financial aspect. One person observed Iwoca add £7,000 in interest and fees while attempting to arrange a payment plan. £7,000. On top of everything else they faced. Here's what really caught our attention. The Financial Ombudsman Service has received numerous Iwoca complaints. We're referring to cases where Iwoca continued lending to businesses they knew were struggling, which is irresponsible lending. Customers complained about threatening and intimidating debt collection practices. Family homes were put at risk through charging orders. When the Ombudsman has to get involved, you know something's not right. Let's be honest about what this means. If your business is unable to secure loans from Barclays, HSBC, or other lenders, what is your plan? Are you considering borrowing at high interest rates of 24% annually in an attempt to turn your situation around? Many of us have experienced those 3 a.m. moments when any solution appears better than watching everything fall apart. However, the harsh reality is that if your business struggles to secure standard bank funding, taking on expensive debt that jeopardizes your home is unlikely to address the core issue. So what should you do? Before contemplating Iwoca, explore all other options first. Use government schemes, asset finance, invoice factoring, anything that doesn't require you to put your home on the line. If you're still considering them, have an independent person clearly explain that personal guarantee. We mean a thorough explanation. Understand what happens when situations become difficult. The real debt guy is always available to help you avoid a crisis. Ask yourself the hard questions. If your business fails, can you personally afford to settle this debt? Are you solving a problem or just buying time? What would your family say if they knew you were putting your house on the line? What if you've already borrowed from Iwoca? Don't panic. Yes, you've signed a personal guarantee, which means you're personally liable if your business can't repay the debt, but you still have rights and options. If you don't have cash to pay off your debt, some people consider taking out a personal loan. While we don't recommend this choice lightly, we understand that sometimes options can be limited, and the main goal is to minimize the damage. Remember, borrowing personally means your new loan is protected under the Consumer Credit Act, offering you important legal safeguards like clearer terms and better complaint rights benefits that many business loans don't provide. However, it's important to understand the risk before borrowing more. Using personal loans to cover business debts can increase financial pressure and may not be suitable for everyone. The Real Debt Guy's final thoughts. We're not here to criticize Iwoca specifically. They're simply doing what any business does, making money. We are here to ensure you understand what you're signing up for. A business loan secured by a personal guarantee is not truly a business loan. It's essentially a personal loan disguised as a business loan. Given the high interest rate and aggressive collection methods, this is a decision that shouldn't be taken lightly. Your business might be struggling, but that doesn't mean you have to risk everything for it. Sometimes the brave choice is recognizing when to stop digging the hole deeper. If you need help understanding your options, whether that's before you borrow or after you've already signed up, that's what we're here for. Check out our I Need Help with Debt section or speak directly to the Real Debt Guy. Disclaimer. This article is based on publicly available information including financial ombudsman decisions, customer reviews, and Iwoca's own terms. The Real Debt Guy is a qualified financial advisor and a UK debt expert. The information in this article is considered to be true and correct at the publication date.